The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. I am the co-host, so we got half of the Money Masters here. Tom is out today. It is Angie's birthday, I believe, this weekend, so I know they're going horseback riding. Hope that they absolutely have a great time. I think it's going to be really cool down here in Florida. When I say cool, I mean actually it's going to be cooling off a little bit, so it's a great time to go horseback riding. And right now, so if we take a quick tour around the markets, you got the Dow trading down 122 points, S&P's down 12, Composite down 28, small caps down 6, and not a lot of green on the board, but if you do take a look at what is popping, looks like Chipotle. I think the symbol on that is CMG. We'll take a look and we'll see what's working, what is not working. You can always give me a call, 877-927-6648. Absolutely would love to hear from you. It'd be nice to have another co-host in here today with the Money Masters. And what I've got up on my screen, folks, you want to turn to, hopefully you go to the homepage of TFNN.com, and over on the right-hand side, you'll see a little area that's got little red dots around it, if you will. You can click on that. You can bookmark that on your device, mobile device, your iPad, iPhone, your Android device, and you'll get the live streaming video. You get the video, the audio. It's a great way to follow us. I know that we've got folks that are plugged in while they're at work and they're looking down at their phone, so that's really a cool thing. It's a great way for you to be able to learn. We're certainly going to be able to teach you. And what we've got here, I've got up on my screen. So the first chart here that we're popping up are the Qs. Why the Qs? Well, you know, the Qs had been acting very, very weak up until, you know, the last maybe 6, 7 trading sessions, if you will. When I say weak, with regard to where it was in position to the October 27 swing point. Well, the Qs finally got up there. The October 27 swing point. What's going on here with my mouse? There we go. Come on, baby. That's interesting. So this will make it fun for me. So we got the October 27 swing point, and right there, the low on that is 58.03, high of 59.20, 104 million shares. Now, it's trading right now out at, Qs are trading out at 57.97. So the number you're going to want to watch today is 58.03. Now, we know that there hasn't been any substantial volume in the marketplace. So if you were to actually be able to test that on lighter volume, less than 104 million shares, close back above it, that would give you additional confirmation that the Qs, which had been kind of a weak link, if you will, the Qs want to go up and they want to test the high, the 59.20 area. And so if it can get up there, the ideal pattern here, which would just totally be a head fake, the ideal pattern would be to get just slightly above it, right in that 59.69. You see, this would be a 1.618 expansion of that area. So you're going to want to watch the Qs. You know, volume, we've got, 40 minutes into the trading session, and what you've done is you've done 9.2 million shares. Again, you know, that's going into 104 million shares. So you're not going to see the type of volume. Well, of course, you don't know till the day's over. It's only the first 40 minutes of trading. But it doesn't look like it's going to have that type of volume. And if the market pushes up into that in the Qs, that'll be one of the signals that you're going to want to look at. If we go take a look at the other ETFs that are out there, we take a look at the other ETFs, you're taking a look at the diamonds. So let's take a look at the diamonds. The diamonds are important to be able to take a look at because for the longest period of time, they have been over the October 27th high. That October 27th high, the top of that is 122.58. The diamonds, you're trading out at 123.23. And what the diamonds are doing, you know, it may test the top of that. And at the top of that, you had the diamonds actually gap up. When we left December 30th, we celebrated New Year's, if you will, and we came back on the 3rd of January. You had the diamonds gap up. The low right now in this area here, with regard to the candles, we're taking a look at this little sideways formation, is January the 5th as well. That had 8.6 million shares. Let's take a look at how many shares have traded here in the first 41 minutes of trading. You've got 1.6 million shares. You could multiply that times 6, so that would be about 9 million shares, what we'd be looking at today if you just did the straight math amortization. Of course, that was my quick mind. I don't know how accurate that was, so you might want to do your own math there. So the low 122.59, that had 9 million shares there. So, you're going to want to watch. So your second thing that you want to take a look at, in fact, you can listen in. I'm filling in for Tom from 4 to 5 today, and Ken Shreve is going to fill in for Tom from 5 to 6. So you're going to absolutely want to tune in there, because we can take a look and see, where these markets have closed, what they have tested. But if the Dow closes back down below that 122.58, that'd be sending a fairly ominous sign that maybe this move here on light volume to the upside is over for a bit. Let's go take a look at the other ETFs that are out there. We know the SPYs for the last couple of days, 3 trading sessions, have been out there trying to tackle that October 27th area. We'll punch that up on the screen here. So on the SPYs, what we're looking at, SPYs right now trading out at 128.14, and you can see that yesterday on the SPYs, the high on that October 27th candle is 129.42. Yesterday you closed out at 129.70. You did it on 119 million shares versus the 389 million shares. As you're backing off today, what are you backing off into from a volume standpoint? Again, if we just simply go back and take a look at that gap when we came back on January 30th, right now, what you're doing is you're trading inside that candle from January 3rd, 193 million shares. Let's see if we can do the math here. The math, you've had 43 million shares, so 43, 240, to about 280 or so is the volume. Oh, so the SPYs have got some volume in it, for sure. That's just doing the straight math. Now, straight math doesn't work, if you will, because you've got more volume that'll typically come in, certainly at the open, and more volume at the end. But there is some volume in this baby. We'll go ahead and we'll go dive down a little bit further. But let's go take a look at the small caps that are out there. That's the IWM. Let's take a look at those same areas here, because what we've got is we do have some synergy with regard to what the markets are trying to do. So the small caps, they are trading. The small caps never made it up over this, the October 27th. Oh, maybe they did. Let's see, the IWM. So October 27th, the high of 76.97. Let's see where that thing closed yesterday. So it closed yesterday at 76.92. Okay, now the high was 76.92, closed out at 76.80. So it didn't get up above it. Yesterday had 36 million shares coming into it. So far today, you've got 9 million shares. So, you've got some volume out there for sure. And we take a look at, so on the small caps, the IWM, what you're going to want to be looking for here is you're going to want to make sure that it doesn't, but if you're bullish, you want to make sure it doesn't bust through the low from October 27th at 74.49. Let's go to our first caller and my first co-host, Susan in Boca. Susan, thanks for calling.
Steve, how are you?
I'm doing great. Yourself?
Fine, thank you. Well, you just went over IWM because that's my question. I'm still holding TNA.
Okay. All right. Good. And so let me go ahead and pull up the TNA, if you will. So TNA, which is the direction shares long, 3 times long of the small caps. And let's see if I can get my computer here to participate with me. Okay. So now on the TNA there. Stop wise, where are you looking at?
Well, I had a stop actually around. I got in around. I have a stop around. I don't even know because I'm not by my computer.
No, that's okay. That's okay.
Steve, I'm not there.
Yeah, no problem. No, look, no problem there. It's what all of the ETFs are doing right now is the question's going to be, are they going to go down, push down, and try to close the gap? From, in this case here on the TNA, you'd be looking at the January 9th time frame. And I don't know if your stop is on the TNA. The high of that would be 47.48. And what it's really all about, how we would really put this together is that correlation between the U.S. dollar and and the markets. If we take a look, I'm going to take a quick spin here, Susan, over to the euro. Okay. So let's take a look at the euro, see what that is telling us. And the euro now is trading. Oh, the euro busted my hammer candle on that 120-minute chart. So that's not a good sign. We'll have to see how that closes here in the next couple hours. Let's back this thing out a little bit. And what the euro is now, looks like it's trying to do is go down. Come on. I'm sorry, Susan. I'm having a computer issue here.
No problem.
Yeah. So, no problem for you. You should be on this end. Easy for
Better
you.
you than I.
Yeah, easy for you to say. Okay, so what the euro is doing now, the euro is, if it continues this way, what the euro wants to do now is go down and test the 1.25861, which will absolutely put some pressure on the markets here. And, you've got a pretty good profit, I think, in the TNA. Of course, you're probably not appreciating this morning as far as, what it's down. But just make sure you keep your stop in place and, let the market take you out of the trade.
Thanks so much, Steve. Have a great weekend.
Okay, you too. And thanks for calling. I appreciate it. Folks, you can also give us a call, 877-927-6648. And so let's go take a look at that euro. You can see it's trading on the daily chart out towards the bottom of the session here, trading out right now 1.26485. That is underneath all of the lows here over this little quadrant, over this little period right here. I see that it's a result of a mere fact that they're going to be downgrading some banks. Of course, we already knew that, so that's nothing new. But from a trading standpoint, what you're looking for, this is going to be really interesting because, what I do expect is this pattern to hold. And the pattern that I'm talking about, folks, is I'm talking about where we've got this August 25th, August 26th area, P-index area. That low that I gave to Susan, 1.25861, is the low of the candle going back to August 25th. What you also have is an A to B equals C to D. That completes just slightly below that at the 1.245 area. You've got a 0.786 right at 1.25. So what you have right inside this area here is a lot of, is a heck of a lot of support, or what should be support. Now that area gets broken, then what you're going to have is the euro, quite frankly, not only go back and test the lows out here from May of 2010, but it'll go much, much further than that. Why? Because we've got a 0.786 Gartley in place here. You've got that August 25th, 26th area, which really should act as strong support. If we take a look at the, if you haven't seen this chart here, I'm going to pull up the S&P weekly chart, and you'll see how the S&P, when it came down, how it was testing that area. And it did that here during that week of October the 4th. And when you take a look and you go over here to the side, what you're going to see is the week of October the 27th, 2010, how that area held. You also had a nice confirmation there with this bullish engulfing. Again, this is a weekly chart that we're taking a look at. You also had a hammer candle, which got tested. So remember, I said my hammer candle on the 120-minute, has been busted through, but it's going to depend on where it closes during that session, whether or not that hammer candle. And the hammer candle, folks, if you take a look at this, this is where you've got the market pushed down, but the bulls came in and they pushed it up. They're not pushing it up right now because you got the Dow down 140, S&P's down 15, and we'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks, Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, and host of the Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow off 154, S&P's off 17, Composite down 33, small caps down 11. A lot of red out there. King Dollar up almost a buck. Up 96 ticks. Let's go to Stephen in New Jersey. Stephen, thanks for calling. Thanks for holding.
Yeah, thank you, Steve.
No problem. How are you today?
Good. I had one question about the S&P and the other indexes.
Yeah.
It seems like you have several butterfly patterns you're kind of forecasting for the near future to complete the pattern that you see on a kind of a shorter term.
Well, we have to see how today plays out. But
right.
yes.
But I mean, that was kind of what we've been talking about for, I guess, a week. But it seems like on the longer term, if you go back to the May top down to the October bottom.
So when you say longer term, are you looking at a daily chart or?
Yeah, daily, on a daily.
And which are you looking at, index or the ETF?
The future.
Okay.
The S&P future.
Okay.
If we just calculate from the May high down to the October low.
Yeah.
Obviously, the 6786 level was calculated around the 1292 area. And obviously, on Tuesday, we finally got up to that area.
Right.
And while we got through it by a couple of dollars, I think we got up to about 1295, maybe, or something like that. On Tuesday, and that was about on the full moon. I guess you would you'd consider that pretty close hit to the full moon.
Okay, keep going.
And then we kind of hit that as resistance, and then we tested it again on Wednesday, and then we retested it again yesterday,
Yes.
and now we've kind of failing. So doesn't that seem like that's kind of some confirmation that maybe the 786 is really going to be the resistance level, and that we're going to have a reasonable correction off of this?
Yeah, so if I go back, you were taking it off of what, the May high or
the high, the big high.
The big high. So if we go back out there and we're taking a look at, I've got the continuous contract up on the ES Mini. The high out there is 1373.50, all the way down to the low that we had that was put in on October the 4th. The low there at the 1106 area. Now the 0.786 would have been right at 1308. Okay,
well,
so go ahead.
Yeah, I guess I was using S&P 500 daily future.
Okay.
So actually the 786 was 12, I think about 12.
So you're looking at the S&P cash is what you were taking a look at the index.
Okay, or the future. I mean, they're $1 off. Yeah.
Okay, yeah.
Future of the cash.
Yeah, well, that's okay, which is what I had up there. But we'll go ahead and pull up the cash. Okay. So
because that level, the 786, which we were talking about, for over a month, I guess, was 1292.
1292 was the swing point. Well, let me see. First, it's a swing. It was a key swing point from October 27th. If I take a look at the S&P cash and go all the way back to the May 2nd high, the 0.786 actually would be at 1307. So at 1307, are you watching us on Tiger TV?
Yeah.
Okay. So so I'm going from the May high. May 2nd high all the way down to the October 4th low. And the 0.786 retracement on that would get you at 1307. The 0.618 was 1257. So we're up above that. The S&P are moving towards, once you're up above that area, it says, okay, you can go up to the next retracement, which would have been 1307. What also was up at that 1307 is an A to B equals C to D, or very close to it, coming off of the November when we came back from Thanksgiving, if you will, the Friday of the 25th, if you will. So you've got A to B equals C to D, also completed in that area. You did get a close above that, albeit on some lighter volume up there. And, it still looks to me like this pattern, wants to go ahead and complete. I know it's going to, freak everybody out, if you will.
Well, I think the only question I had is since we completed the kind of move of a move, as you call it, to the prior high, which was, and it was on pretty much almost the day of the full moon, so on the lunar cycle. And that now we finally showed resistance at that level for a couple of days, and now we're selling off. That maybe that is a pretty strong indication that maybe the reversal comes in now rather than up a little higher.
Well, it's absolutely possible. What I'll tell you about the full moon. So the highs didn't come in on the full moon. In fact, at this stage we still have had the lows come in on the full moon. And if you went back and you took a look at the last 17 full moon cycles and took a look at whether you should have been between the full moon going into the new moon, whether you should have been long or short, and Stephen, go back and do that work. What you will see is that between 72 and 85% of the time you should have been long that full moon, even if the market wasn't moving down into it. Alrighty?
Okay.
Hey, thanks for calling. I really do appreciate it. Have a great weekend out there. 877-927 to get the Alpha 134. When we come back, we'll go to Dennis in Colorado, then Bill in New York. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time has been spent in recession. How would you like the strategies that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will absolutely astonish you. I'd love to introduce you to these concepts that will absolutely change your life. You'll learn the 3 ways to grow any business exponentially. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien and host of the Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com, look under Breaking News, and click on the Get Steve Rhodes Special Report link, and I'll email you this free report, Pathways to Wealth.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow off 136, S&P's off 14, composite down 28, and we're going over to Dennis in Colorado. Dennis, how you doing?
Good. How you doing?
I'm doing great. Is it football fever in Denver?
Well, yeah, it's after last week's win. I think everybody's pretty excited about tonight or tomorrow night. It'll be fun.
Yeah. Now is this so with all the fever that's going on? Everybody driving in their cars with their flags on their windows? And
I'm sure they are in Denver, in the metro area. I don't live in the metro area, but I'm sure they are.
Okay. What part of Denver what part of Denver? How do you like that? What part of Colorado are you calling from?
I'm out in the not so pretty part. I'm out in the eastern plains.
And there's a not so pretty part?
Oh, yes, there is. It takes about 100 miles before you get to see the nice, pretty mountains.
All right. Now, so what are your winters like out there? Do you get snow, a lot of snow, or?
Not like they do in the mountains.
Okay.
You know, and it's really, really, really dry out here, so we could use a blizzard, believe it or not.
Okay. All right. So we're gonna send you, everybody in the den, they're gonna send you blizzards. All right.
Well, rain would be better, I guess. But most of us are agricultural out here, and the crops need it pretty bad. It's blowing pretty bad. So.
Wow. Okay. All right. Well, thanks for calling. What did you want to look at?
Well, I guess after listening to your previous caller, and I think I qualify under several of your listeners. I'm not a big investor, just getting started.
Yes.
Small capital amount.
We love you. We love you.
Yeah, I know. And you guys have been great. My question is, the last couple weeks I've did pretty well. I got up about 10, 11%.
Beautiful. That's great. That's good.
Yeah. But I really listen to you guys, and I see, the market is going to go down. I've got I've got 10 of them. I think they're all good growth stocks.
Yes.
Do I sell them and rebuy them later, take my profits, or, weather the storm?
Well, so let me try to, first I'd have to know what your stocks were, but let me try to even maybe back it up. The best way to trade is to have a plan, and have a plan for each of those stocks, if you will.
Right.
And part of that plan, is also just simply having there's really two sides of the exit that I take a look at. There's the exit where if you're simply if your trade is wrong, whatever decisions, whether it was by finding something on your own, whether, through a chart or reading or listening to one of us here at TFNN or CNBC, whatever it is that got you into the trade, you want to make sure that you've got a stop in place. So that's your first exit. The other side is what pattern, is it completing? Is it an ABC pattern? Because these markets will, they will, as you know from listening, they will make either retracements or ABCs or Gartley's butterflies. But there's some pattern, maybe it's just simply coming back into a swing point with volume or something like that. So you want to be able to have, a strategy on both sides. And then what you want to do is what type of investor are you going to be pretty much just taking a look at the daily chart or a weekly chart? Because from there, then you're going to stay inside that chart that you're trading. You're going to be staying inside that pattern that you're trading. Because otherwise, what you do have, is just a lot of daily noise, a lot of volatility that's in the marketplace. So that's really the first thing that I would recommend is truly having a trading plan for any of the 10 stocks that you have, no matter how good they are or not. And part of it is really being able to protect your profits. You mentioned that you had some, you were up pretty good this year. Excuse me, don't know, where that relates to, when you bought the stock, if you will. But what's so important is to continue to move your stop up to a logical point. And if the market takes you out, the market takes you out, and then you can reassess, whether you should buy back in, whether you should buy that, specific equity back in. But does that help, at all?
Yeah, well, most of them are tech. I've gotten a couple of, I'd love to get all of your newsletters, but unfortunately can't afford them. I get the tech newsletter.
Oh, that's great.
So I've got something like DDD.
Yeah, David does real. Just hold on for a second, Dennis, so we'll go through this break. 877-927-6648. We'll be right back, folks.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be at the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow down 137, S&P's off 15 right now. Composite off 29, and we're on the phone with Dennis in Colorado, and just talking about just trading in general and stops and plans or what have you. So, so you were mentioning, about newsletters and so forth, and thanks so much for subscribing to some of the newsletters that we have here. We wish you could have all of them as well, but I would stay with inside, what the newsletter individual is looking for. If it's David White, absolutely great. Trader out there, does so much research, has got so much knowledge, and I would just simply, stay with inside his trading plan. If it's other things that you mentioned you've got one that's 3D Systems out there. That's symbol on that is DDD. It's actually up today. It's one of the stocks that's green, up 16 ticks, if you will. Trading out at 17.22, so that's pretty nice in a market that's off 134 points. And I would stay with inside, but what I like to have is just simply an overall trading plan where I've got exits in place, both on the upside and the downside, and then as I have profits, I just simply move the stops up. And because I can't control the market, I can only control the trade, if you will. Does that make
Sure, yeah, it makes sense. I just, I really love these, and it'd be great to make it now, let them drop, rebuy them.
Yeah.
Again,
on the Tech Insider, I think it's a longer term. It's really, what are the type of trades that are going to fit your personality? And maybe, you have both trades. Maybe you're taking a look at both some longer term stuff where you don't let the daily volatility whip you out because you've got a longer term time frame on it.
And I don't. That's one thing I don't do.
Yeah.
But listening to you and Tom and several others and Tom was saying, the market may be good. And you guys are great, and I know you're
well,
not.
Thank you.
You don't have a perfect crystal ball, but if it goes back down to 10, the Dow, for example, goes bach to 10 and everything goes with it, I know I could rebuy all these things later.
Sure. Well, hopefully the advice I'm giving you is good for you to think of. I do, and I do appreciate you calling, and I hope you get a ton of rain out there.
Oh, me too.
All right.
Thanks very much.
Thanks, Dennis. Good to hear from you. Let's go to Bill in New York. Bill, thanks for calling. Thanks for holding.
Oh, thank you for taking my call.
Oh, my pleasure. My pleasure. So what's happening in New York? You got some cold weather up there? I think you got a cold blast coming through, don't you?
Yeah, it didn't get here yet. It should be here this afternoon. It was snow flurrying a little while ago and still was in the high 30s.
Oh. Now, how cold is it supposed to get there over the weekend for all the football
It's going to be
in
the 20s, and I think on Saturday or Sunday it's not even going to get out of the 20s.
Oh, my goodness. Hey, come on down here. It's going to be cold, but it's not going to be that cold.
next month I'm coming down.
Oh, yeah. Okay, great. Oh, that's great. That's great. You wanted to tell me what you wanted to look at. Celgene, I think?
Yes.
And what? How can I help you there? What do you...
Well, I'm trying to... I have both of Tom's books, and trying to get this ABC on this here is looking on a daily. Is this like in the D set part of the ABC, or am I looking at it wrong?
So you're looking at a daily chart, and tell me where you're plotting your ABC that you're looking at here.
Well, from what I have here, I started my ABC on. Let me see. I'm trying to get this up.
Yeah, no problem. No problem. Now, go ahead.
November 25th.
November 25th. Okay, so that's great. You know, that's a great date to start. That was the Friday when we came back from Thanksgiving. So that's great. Okay, so you start there, and then where have you gone for a B point on this?
In the B point, I stopped at the 1227 and 1228.
12. Okay, so folks, you know what we have going here. What Bill's done, he started right here down at November 25th, took it all the way up to the 20. Now, in this case here, I would say you'd really have to take it up to about the high of. I mean, maybe that's where it is, January 3rd, because before it went ahead and pulled back down to the on January the 6th. If you're going to take a look at that ABC, that would be out there.
Okay.
Just simply because of how the market because what happened is you've got your C point, which in the C point I'm talking about, and that is the January 6th time frame. The low there was 66.28, and see how that got underneath the low from December 28th. Okay, so you had a candle that came down that was lower on the right-hand side of where it is that you were looking at. I believe that it did, because the low was 66.73, and you got down to 66.28. So it would be that lower swing point, that lower candle on the right-hand side, that in this case here for that A to B equals C to D that you're drawing, that's where I would use as my C point. Now, if you're using that, what you're taking a look at is you'd be taking a look at your B point as January 3rd, where you did 3 million shares. And when you came past that, you came past it with 5.4 million shares. So that was saying that if you take a look at that, A to B equals C to D, and there may be others out there, we'll take a look at it, that should take Celgene up to 75.25. Is that what you were, is that the kind of the range you were looking at?
Yes, but with this today's pullback, I thought maybe it peaked at that just yesterday, but...
Well, here's what happened in Celgene. You know, if you it's what Celgene did yesterday was it made an expansion of the swing point from October 24th. Are you watching this on Tiger TV?
Yes, I am.
Okay, so if you see where my cursor is, you've got a high on October 24th, and you can go measure this back on your system as well. The high there was at 68.25, and if you measure the price point from 68.25 all the way down to the low that was put in on your November 25th area, where you started your A, if you took that price point and you multiplied it times 1.618, okay, and you add that to the low, that's going to take you up to where Celgene got to yesterday. See this 1.618 expansion? I don't know if you can see that, how well you can see that. I really wish I could blow these numbers up, but you had a 1.618 expansion, which is a normal spot for a stock to take a breather, for it to do something else, for it to pull back. But if you take a look at yesterday's action, you had 5.4 million shares up at the high there, and today so far you've only pulled back with 801,000 shares. So we're we're 2 hours into the trading session. So the type of volume, the type of pullback that Celgene has is maybe going to be like around 3 million shares today. 3 million pulling back when yesterday you did a total of 5.4 million shares. That's the type of nice pullback that you'd like.
So you would stay with it then?
I would stay with it. I would stay with it. But, I don't know where your entry point was and your stops and things of that sort. So that's the but stay on the line. We'll finish with you, and 877-927-6648. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. 877-927-6648. Dow's off 124. We're on the line with Bill in New York, and we're taking a look at Celgene. The symbol on that is CELG. And so I just want to finish this one up for you, Bill. Now, what I did was, during the break, is I pulled this back to a weekly chart. Okay? Now, like I say, I don't know where you're in and so forth, but what Celgene is trying to do is complete an ABC up. And that ABC up, Bill, starts on the, because I know you're watching on Tiger TV, get my mouse here. That starts on the week of March of 09. That makes a lot of sense. So you had your A to your B move completed here during the week of March of 2010. It goes ahead and pulls back. It consolidates sideways for quite some time. The volume you had on that B point looks like it's about 18 million shares on that B point. And when you came through that, let's see, the first time you came through with 14, 15 million shares, 21 million shares. You did that on the week of October the 28th. And then what that was doing, that was giving you the signal that it wanted to confirm an A to B equals C to D, because you came through the B point with volume. You're confirming that this week. You've already got 22 million shares as well. And so that wants to complete at 76.91. Inside an ABC, there can be other ABCs. If you take a look at the one down here, which goes from the low of August 12th up to the high of October 28th, and then backs off into that December 2nd area, what you will see is that you've got an A to B equals C to D, a smaller one inside this leg here that also completes right there, and you don't have much volume at the top here. The volume at the top is only about 14 million shares, so excuse me, but Celgene wants to get up into that $77 area. But you got to make sure you got the right money management strategy in place, okay?
Yes.
Hey, Bill, thanks for calling, and
Okay.
have a great weekend. Stay as warm as you can up there.
I will. Thank you very much.
Okay, let's go to Mark in Massachusetts. Mark, thanks for holding. I really do appreciate it.
Hi, Steve. Happy Friday.
Thank you.
I know I'm probably going to be your last caller, and I'm pushed for time. So I just want to say that we had a big spike downward in the dollar about a half hour ago. I guess S&P downgraded France. I was watching, and my question is, Larry Pesavento on his show on Friday, also on Tommy's show, said that the euro was due for a correction, and not a correction, but a small rally. My question is, and if you don't have time to answer it now, maybe you can address this on Tommy's show later. Do you concur with that? Are we going to have a rally in the euro? And it may be a short term, and it may only be until next week when we have the that next lunar cycle, which I think is a week from Monday. And what do you think of that, and what will that impose for the stock market for next week?
Well, you got to go one day at a time. I do believe that the euro is eventually going to rally. The question is going to be, what pattern does it need to complete first? Right now, with regard to today's trading, it's giving us a signal that it wants to get down and test the bottom of the swing point, which also happens to be where we had a back-to-back planetary index date. So it wants to get down into that 1.258 area, but really wants to go down just a little bit further than that, maybe that 1.245. That's where it's going to complete a Gartley buy pattern. The problem is going to be we're coming down on a steep angle, and if that area doesn't hold, then it's a good night, Irene. But I do believe it wants to bounce, but it can't until it gets above, there's no smooth sailing here until it gets above 1.27350. Still could do it today. But,
okay.
That's what I would be looking for. All right, Mark?
Okay, great. Can you update us on what you do?
From 4 to 5? Yep, from 4 to 5, I absolutely will.
Great.
Real
quickly. You have a great weekend.
Okay. And I know we're not going to be able to get to Mark in Fort Collins. I do appreciate you calling. You were looking at the SSO, but maybe Basil will be able to cover that on his show. Stay tuned, because in the on-deck circle, Basil Chapman, he is going to hit one off of the wall, I am sure, at the Green Monster. And there's not a whole lot green on our charts here, folks. So thanks for being here. Have a great weekend. Again, I'm filling in from 4 to 5 for Tom today, and been a pleasure to be here with you. Have a great weekend. Take care. Bye-bye now.